All right, how's it going, everybody? Just going to share my screen here as soon as this live stream kicks in. And we'll go over one more trade here in real time. So what I'm going to do is sell another put because we got a big down day today. So when there's fear in the market, we can essentially promise to buy shares. Um, when there's fear in the market, that's when we want to buy, number one. Number two, we want to get paid just to promise that we're going to buy shares, right? So that's the whole name of the game at Abundance Asset Management. We're going to do this same trade again. We did this trade already once. It's kind of fun to do these things over and over, rinse and repeat, right? So what we're going to do is sell one contract on the QQQ. We are going to offer to purchase these shares at $5, or sorry, $550 per share. And we're going to get paid $5.10 just to make that promise. So you can see here right now that the mark is $5.08, let's say. So I'm going to place this order, and then I'm going to go over some things here. So I'll just send that. Right now, it shows in our cash and sweep vehicle up in the top left here where my cursor is that we have $340. It's actually not accurate. We have quite a bit of cash sitting in a money market fund. So while we have the cash, we don't want it just sitting there losing purchasing power. So while our cash is waiting for times like this and waiting for the markets to decline, this is what we've been waiting for since basically August, I guess. So when the markets decline, we want to be able to get that cash quickly and use it to purchase shares. So we use that cash in the meantime in a money market fund, and it's going to earn us interest while we wait. So the money's always working for us. And then let's say that the stock price drops drastically and actually goes down below 550. What we want to do is we will sell the money market fund. It settles in 1 day, and we will get that cash back in our account up here in our cash and sweep vehicle, and we'll use that cash to purchase the shares. And obviously, when volatility is high, that is the time to buy. So it's kind of ironic, actually. This order might not fill because the market seems to be rising right now. We don't always get what we want. So what I'm going to do is just replace this order, just change the price of it here. So we're going to do 490. Let's do 490. Can only get what the market will let us take, right? So we're going to sell this option for 490. There we go. It filled. So you can see up here, now we have $830 in our cash and sweep vehicle. I'll probably take about $500 of that and put it into the money market fund. So it's kind of nice. We're getting a premium. We get paid upfront right away, just like when you go buy car insurance, right? So you go buy car insurance, you get paid, you got to pay right away. The car insurance company is receiving that cash for a later obligation to, if you crash your car, they got to buy your car off of you. Obviously if it's severe enough. And that's all we're doing. We're becoming the insurance company here, selling insurance on an asset that we already want to own in the first place. The great part about this is it's not a crashed car that we got to squish into a square after and end up with a metal cube. We are owning 100, like a basket of 100 of the largest non-financial companies in the world. They have always recovered from price declines. If they don't recover this time, it will be the first time in history that it's ever happened. So I'm willing to take on that risk. And you have to be willing to purchase the asset in order to make this trade safely, right? So, that being said, I don't want to make this video too long, but I'm happy to go over any of the details involving this trade. We've already, in the last, since I've been talking, this trade's profitable by $14. It's going to continuously fluctuate all the time. So I can look at these other trades that we've got going on. They're going to be losers for sure. So this one's down by $178. Totally fine. The thing is, we're not in any danger here, really, right? The only danger we would be in is if I got all emotional and closed this trade. It would be absolutely ridiculous because all we're doing here is promising to buy these shares at 578. Well, the QQQ is at 602, $602 a share. It would still have to fall by about another $28, $20, $25 just for us to have the obligation to purchase it. So I just ignore this. This is completely irrelevant. We placed this trade. We got paid $4.30 to promise to buy those shares at 578. We're not about welching on our promises, so I'll just leave the trade alone. Let it happen, however it happens. I don't know. The market might go down to 570 by December 5th. I don't know. Maybe it will. But we are just managing risk here. And the risk is if we close this trade right now, we will lose $180. So that's completely against the rules that we have at Abundance Asset Management. And then this trade's losing $413, which again is completely fine. We sold some shares of the QQQ at 597. So when I placed this trade, the QQQ was like at 630 or something like that, somewhere around there. But at that time, I was happy to buy back at 595 because we already sold at 597. So I got paid $4 a share to buy back in at 595. So I'm technically better off to buy back in at 595 when I sold at 597. Plus, we're getting paid $4 a share. Fantastic. It's all good. So in 11 days, if the stock price falls another $7 or more, a little bit more than $7, we'll have to purchase the shares. Completely fine. So again, just leave this one alone. If the stock stays above 595, this will eventually turn profitable. And if you want to know more about how that works, feel free to comment or get in touch with me. I hope you have a fantastic Monday afternoon